Good day, my name is Christelle from Frans, Klerk, Independent Technical Analysts. We want to kick off the show with the J357, the Food Producers Index. And in this index, we have shares like Tiger Brands, AVI, RCL, Astral Foods. And we can see that the beautiful next higher low was confirmed. And that was above 6,166 on the Food Producers Index. And that tells me that there were buyers in the dips. As the instruments declined, there were buyers that protected that share price. And this index will only be a concern again when 6,087 changes into a resistance, because then we will have lower lows, and that will be a concern again. The 40-week moving average, obviously that line in the sand for long-term investors, and we can see here that in the past, this 40-week moving average was the warning. When the index could not change and keep it as support, it was a warning for long-term investors to say, consider taking profit. There's not enough buyers to keep this index to higher levels, and maybe you should consider taking some profit off the table. What is not ideal about this index at the moment, it's almost in overbought territory. We're sitting on a 64 on the stochastic, which means at an 80 reading, we will be in overbought territory. So again, if you're not in it already, then rather sit on your hands and rather look for shares that are coming from a lot lower base and where the stochastic is in oversold territory. And remember, no matter what indicator you use, whether it's an RSI, a MACD, any indicator, Williams percentage R, any indicator that you use to highlight overbought and oversold levels, use that to buy the index or that instrument when it is oversold. When that elastic band has got a lot of room for upside, that is the ideal place to enter the position. The next index we want to have a look at is the Consumer Services Index. And shares within that basket is Bidvest, Shoprite, Clicks, Pepkor, Spar, and Mr. Price. And we can see again the next higher low on this index will be confirmed above 17,074. So what some analysts might even call this a double bottom, but for me, that support it found there around 15,778 is a little bit higher than that 15,527. And in order for that formation to be a double bottom, the support levels needs to be at almost the same place. But what we can see here is that there are buyers in the dips, and that is seen as positive. Above 17,074, that possible next higher low will be confirmed. I will be concerned again about this index below 15,725. And let me just show you what lower lows looks like. So in this case, the instrument bounced, it found a little bit of resistance and retraced again. And if this instrument should bounce, this index bounces, it retraces again, it found a little bit of support, and let's say it bounce again and find resistance and retrace. When that previous support levels changes into resistance, lower lows will be confirmed. And that is seen as negative because it's still coming from a low base. And when these resistance levels become lower and lower, that is seen as negative. And that basically implies loss of momentum. It tells us that there is not enough buyers to keep this market afloat, or in this case, the Consumer Services Index. J59 represents the technology index on the JSE, and shares that are in that basket are well-known: Prosus, Naspers, Datatec, just to mention a few. And we can see that this index have had massive rally, 4.56%, 7.23%, 1.8%, 4.2%. Week after week for the last 6 weeks, this index have just rallied. But now it is very overbought, which means the probability of this index to retrace is more likely. When an instrument is overbought, it tells us that elastic band is stretched to the side, and only one or two things can happen. One party needs to let go, take profit, in other words, or the elastic band is going to snap anyway. So in this case, I would maybe, if you're not in the technology sector, rather sit on your hands and wait for a pullback and then accumulate again. And we can see again that 40-week moving average is still a support, which tells us that the long-term sentiment is still positive. However, In these overbought levels, I would be very concerned to enter at this stage. And if I can just maybe draw in a horizontal line here and another one here. And we can see that if this index starts to consolidate below 37,276, my first warning will be on the table. It will tell me then there's not enough buyers that could support this index back to 39,756. And you can continue to draw in support and resistance levels to tell you and to highlight where the buyers should continue to support the share in order to rise towards the next resistance level. Either horizontal lines, diagonal lines, Fibonacci levels, moving averages, whatever you use to identify support and resistance levels. We've seen in this market, it is so critical to stick to them and honor them, because below those levels, the warning bells just start to go off and it can go even lower and lower. The life insurance index is the J857 index, and those shares that are included in that basket is Santam, Discovery, Old Mutual, Liberty Holdings. And we can see clearly that there was also the next higher low. It's almost a straight line, but the next higher low was confirmed above 27,320. But again, massive rallies to the top, 8% already in 1 week. Stochastic indicator is already out of the starting block, sitting on a 38, so not an ideal place to enter yet. Maybe rather wait for a pullback and then accumulate, but the graph looks beautiful. It tells us that the life insurance index are trying to reach for new highs, and the next strong resistance is waiting there at 32,737. And you've seen even in last week's show that there are so many cup and handle, higher lows formations on our market, which tells us there were buyers in the dips. The big question is, will they remain positive formations, or will they start to turn around and become lower lows? Because then we know from a mathematical perspective that those legs to the downside can even escalate further to even more downside. The other index we wanted to have a look at is the banking index, and that's the J835 index. And that represents shares like FirstRand, Standard Bank, Capitec, Absa, and Nedbank. And we can see that there is double bottoms visible. And a double bottom is a positive formation. And when this banking index starts to consolidate above 5,644, the formation will be on the table. It means the formation will be confirmed and the optimism might be even increasing. Again, we are sitting in oversold territory. But have a look there, my two moving averages within that stochastic indicator is still pointing downwards. So we want those two averages to start to point upwards, which will give us and confirm a positive divergence. And then obviously, should it not reach that level there around 5,644, and the index starts to lose momentum and it starts to consolidate below 4,889 and 4,837, the next lower lows will be confirmed, and that will be seen as negative. Possible targets for this index: I can take the length of either the left or the right leg and I project it upwards from where that formation will be confirmed, which means that this banking index can go to a possible 6,629. And if we change, if we zoom out, we can see that this index is trading at the same levels it did here in January 2016. And now the big question is, will the strong dividends that they've paid in the past, will those same dividend yields remain in the future? Probably not. But this formation is telling me there are interested buyers at the moment, and they are accumulating it at these levels. The big question is now, obviously, will that 5,644 change into a support? Because if it doesn't, and this instrument and this index starts to bounce but loses momentum somewhere and starts to retrace again, when these support levels start to change in resistance, that will be very, very ugly, because it means that this down leg can even escalate further to the bottom, which means we can become even more depressed and see even lower levels on our markets. And that is formations that appear on a lot of the indexes in our exchange. And even in the US exchange, we have seen a couple of cap and handles, double bottoms, or some cases even triple bottoms. And then the big question is, will the technology stocks in the US remain so positive? Lower highs, are starting to be visible. Triple tops on some of them are starting to be visible. So if there is not enough buyers that are continuing to support those tech stocks in the US, and they start to retrace, there's no ways that our market would be able to go against the trend and continue to reach for higher levels. Please feel free to send through your questions for next week's show. Have a fantastic week. Take care.